Feb March 2019, paper 22, paper 12.
Hmm.
Read the first question.
An item included in the financial statement because it affects the inter- interpretation which accounting concept is being applied.
Was an
Consistency,
item
material
that
included in the financial statement.
that means you put something in the financial statements because not putting it would affect the understanding of the financial statement, would affect the true and fair view.
Okay, so money measurement.
Money measurement tells what? That anything
That you
related
have to,
to money should be put in.
yeah.
See, there is only one thing that we decide whether to put in the financial statements or not. If the item is material, if it is item is not material enough, we do not put it in the financial statements.
Okay.
And if the item is material, so that it affects the financial statements, then we have to put it. So there is only
Hmm.
one thing which depends upon the materiality, whether it should be a part of the financial statements or not.
Okay.
So it is
So it's
material.
B.
Yeah. Come on.
Why is depreciation provided on non-current assets? So that the cost is allocated.
Someone read.
Why is depreciation provided on non-current assets? So that the cost is allocated to periods that benefit from them. Correct only option A.
Go to the next one.
A company a company purchased an asset costing 100,000. It had a life of 5 years and an estimated residual value of 20,000. The asset is sold for 5,000 at the end of the 5 period.
Read
What is
properly.
the asset was sold for 5,000 at the end of the 5 year period? What is the total effect on year 5 profits from both depreciating and selling? So depreciation per year is 10,000 minus 20,000 upon 5.
Hmm.
I'm telling answer 1 minute. 6,000.
Hmm?
6,000 is the depreciation per year. So
How?
6, because I did 10,000 minus 20,000 upon 5.
It is 100,000, na?
Oh, sorry. 24,000.
What nonsense you doing?
Yeah, I'm getting that's literally coming on my calculator.
80,000 divided by 5 is how much?
16,000.
So depreciation per year is how much?
Oh, yeah, 16,000. Sorry, 16,000. I don't know why I got this wrong.
Okay.
Hmm.
Okay. The asset was sold for 5,000 at the end of year 5.
Yeah.
At the end of year 5, the net book value of the asset would be 20,000.
Yeah.
You sold for how much? Can you see my screen?
5,000. Yeah.
So you have loss on sale how much?
15.
Okay, fine. So they want the effect on year 5 profit. Which profit?
Year 5.
On the year 5 profit when you're depreciating the asset and you're selling the asset.
Hmm.
So the
Okay.
depreciation of year 5 is how much?
Depreciation for year 5 is 16,000.
Okay. And the loss of year 5 is how much?
15,000.
So the total expense of year 5 because of depreciating the asset and selling the asset is how much?
31,000.
So the option would be,
D.
huh?
D.
Go to the next one.
A business provides the following information. What was the depreciation charge in the income statement for the end of the year? Okay.
Try doing it.
So the check paid for
Read the question along with me, okay?
what?
Read the question.
Okay. A business provides the following information. Check paid in 2018 for equipment bought in 2017, 15,000. Equipment purchased on credit in 2018, 42,000. Net book value of equipment at 1st January 2018, 83,000. And net book value of equipment at 31st December 2018, 67,000.
Okay. What is a depreciation charge in the income statement for the year ended 31st of December 2018? Okay. So you have purchased one equipment for 15,000, another equipment for 42,000. Okay. So total equipment that you purchased in 17 and 18 would be how much? 40, 50,
42.
57,000.
Yeah.
Net book value of the equipment on 1st January 2018. So I could say that cost minus depreciation would give
Is
me the
net book
net book
value.
value. Net book value is 83,000.
Yeah.
I don't know the cost. Okay. So can I make asset account at net book value?
Yeah.
Okay. So if you're making the asset account at net book value, opening asset value will go where? If you make asset account at net book value, the opening net book value is 83,000.
Hmm.
And the closing net book value is 67,000.
67,000.
Okay. So what would be the depreciation charge for the year?
16,000.
Sorry.
16 now was for minus.
So, but you have also purchased one asset, right?
Yeah.
In 2018 on credit. So I am on 2018, right?
Yeah.
So I have purchased one asset on credit. Okay. So I will get my
Yeah.
depreciation charge over here.
So this check and all?
This was last year, no?
Okay.
You had purchased in 2017. But I am making the asset account at the net book value in 2018.
Answer is 58,000. Option D.
Okay, fine. Go to the next one. Fifth one. Please read it.
Daphne buys a non-current asset for 10,000. It has an estimated life of 2 years and a scrap value of 20,000. Or scrap value of 2,000. She is considering whether to depreciate it using straight line method or to use reducing balance method at 60% per annum. Oh God. Which of these statements are correct?
So she wants to consider whether to depreciate the asset using straight line method or to depreciate the asset using reducing balance method at the rate of 60% per annum. Okay, fine. The asset is of 10,000 and if I am depreciating for 2 years, what would be the depreciation charge for the first year?
10,000 depreciating.
8,000 divided by 2.
Yeah, okay.
Depreciation charge for the first year would be 4,000 and for the second
4,000.
year would be 4,000.
Yeah.
But if I am doing for the as per reducing balance method, so its first year would be 6,000 and for second year it would be 2,400.
Okay.
So she is considering now she wants to think whether to depreciate it using the straight line method or whether to depreciate it using the reducing balance method. Which statement is correct? Profit in year one is higher if reducing balance method is chosen. Is this correct? If you are choosing the reducing balance method, if you are choosing this method, your expense is higher in the year one.
Yeah.
So this statement is incorrect. Think over it. If you use the reducing balance method in your year one, your expense will be more, so profit will be less. Are you with me?
Huh.
So this statement is correct or wrong? I'm waiting, Ashika.
No, it's wrong.
Concentrate here.
Yeah, I'm here only. It's wrong.
This statement is wrong. So everything
Yeah.
that is option one is incorrect.
Yeah.
That means I would say which statements are correct. That means I would say option one and option B goes away
Yeah.
because statement one is incorrect.
Yeah.
Okay. Statement one is incorrect. So this will go away. Come on. Go to the next one.
The profit for the year in year one is higher if straight line method is chosen. Correct.
So this is correct.
Yeah.
Okay. Go to the next one.
The profit on disposal at the end of year two is higher if the reducing balance method is chosen.
Now understand. If I am choosing reducing balance method, that means
Yeah,
that
it'll be correct because depreciation will be this less now.
10,400. It's less or more.
More, sorry.
So depreciation is more.
Yeah.
If depreciation is more, that means the net book value will become less.
Yeah.
Are you sure?
Yeah, obviously, because if they subtract it.
Okay. If net book value is less, that means whatever selling price you're going to get compared to the SLM, you will have more profits.
Huh.
Okay. So if you're choosing your reducing balance method, the profit at the end of disposal at the end of year two will be higher. So this is also
Yeah, so correct statement.
now you
So
don't have
2 and
any other
3.
option. Okay, fine. Go to the next one.
What is not a purpose of control accounts? To assist in the preparation of final accounts. Wrong.
This is a purpose.
Yeah, so it's wrong. To identify all errors where the trial balance agrees. Yeah, this is not purpose.
This is also what?
This is not purpose. Suspense account does this.
Okay.
So this B option.
Go to the next one.
The balance on SLCA was 21,500. This did not agree with the total balance of the sales ledger. Uh, it was discovered that a credit note of 200 sent to a credit customer had been posted to the debit side of the customer's account. What was the balance before the error was corrected? Okay. So
Okay.
20,
So your sales ledger
so
control account
21,
and normal balance is what?
normal balance is credit.
SLC normal.
Sorry, debit.
Okay, fine. So this is the normal balance.
Yeah.
Okay, this did not agree with the total of the sales ledger account balance. That means your sales ledger account had some different balance.
Hmm.
Okay. So I don't know what was my sales ledger account balance. Are you with me? Are you with me?
Yes.
Now come on, tell me what happened.
So, a credit note of 200 sent to a credit customer had been posted to the debit side of the customer's account.
Credit
So,
note 200. What is this?
this is return, sales return.
Sales return. So there was a sales return that had been posted to. Sales return comes on which side?
Credit side.
Okay. And where did you write it?
On the debit side. So, you have to write first. You write 200 on the. 1 minute. You write 200 on the debit side first. I know one way to do this. Okay. You have to write 200 on the debit side. Then, since you posted it on the credit side, you have to 0 0. You have to write 400 on the credit side.
Sorry?
You have to write 200 on the debit side, and then since you want to put it to the credit side, you have to write 400 now, because the 200 will get minus and then 400 will come.
Okay. Yeah. So.
Correct. Yeah, so then you only do that, then you get the balance.
So what do they want?
They want the balance before the error.
So what is the balance before the error was corrected?
21,500 plus 400.
And we go to the next one.
Yeah.
It was over here. It had to be over here. But you wrote it over here.
Yeah.
And if you have to correct it, you will write the double amount opposite side.
Yeah, because then you have to nullify it also.
On the correct side.
Yeah.
Go to the next one.
During the month of June, a business recorded the following information. Payments to credit suppliers during June. Oh, you have to make a PLCA. So, miss, we can make.
Come on, tell me.
Starting is 5730. So this will be on the credit side. Credit purchase is 21,650 credit side. Discount received debit side. Purchase return debit side.
How much?
1,200. And then I'll tell you the end of the year balance.
Payment to credit.
Payments. This debit side.
So 21,650 plus 5,730 minus 850 minus 1,200 minus 16,380. So it is 8,950.
8,950. Option A.
Go to the next one. Read what they want from you.
How was it recorded in the financial statements? Miss, we have to make the account now.
First think properly. First think if you need to make account or no. This is rent.
Okay.
So this is an expense.
Yeah.
Annual rent is how much?
24,000.
So in the income statement will come how much?
24,000.
So option C and D is not with you.
Yeah.
Accrued rent. Accrued rent means
Outstanding.
outstanding expense means
Not yet received.
other payable, not yet paid.
Yeah. Okay, sorry. Huh.
Outstanding expense means not yet paid. So you had not yet paid 24,000. Sorry, 4,000.
Yeah.
Okay. How much have you paid during the year?
12, 20.
10, 20, 35,000.
Huh.
Do you know the format of expense account?
Yeah.
What is it?
Popo B.
Popo B. I you know is 24,000.
Yeah, B is 35,000.
B is 35,000. Opening outstanding is
4,000.
4,000. So you will have closing what?
Prepaid.
Closing prepaid is other payable or other receivable?
Other receivable.
Other receivable would be 35 minus 28.
Yeah, 7.
Which option?
Option number A.
Okay, fine. Done?
Yeah.
Come on. Read the next one.
A year end. At the year end, a
Want?
business
What
has
do they want from you?
value of damaged goods at the year end.
Okay, they want the value of damaged goods. Okay, fine. Read.
Huh.
Read.
At the year end, the business has some damaged goods in inventory. The following information is available. Goods were purchased for 8,500. If the goods are repaired, they can be sold for 10,400. The business will have to pay 2,000 repairing costs and pay 300 to a salesman. The same quantity of damaged goods can be purchased from the supplier for 8,200.
Okay. So goods are valued how?
At cost. At
Or
cost or NRV, whichever is lower.
cost or NRV, whichever is lower. How much did you purchase for?
8,500.
Okay, you purchased for 8,500. What is NRV?
Net realizable value.
What do you mean by net realizable value?
How much it's the value after the
Estimated
expenses.
selling price minus estimated the expenses to sell.
Yeah,
What is the estimated selling price?
10,400.
What is the expense to sell?
2,300.
Expense to sell is 2,300. So NRV is how much?
8,100.
8,100. So cost or NRV, whichever is lower.
NRV is lower.
So value of inventory is
8,100.
next one.
A company undervalued closing inventory for its current accounting period.
Closing inventory is like what?
Like what? Current asset.
We treat it as,
It's an income.
so if you undervalue closing inventory means what?
That your profit is undervalued.
So your profit is understated.
Yeah.
Undervalue income, that means you have understated your profits. Okay.
Yeah, so gross profit will be understated.
Okay. Gross profit of the current year would be understated. So it would be
Yeah.
B, C or D.
Huh.
So current year's gross profit would be understated. And the next year, so
Next year, the closing inventory is the opening inventory.
so next year the closing inventory would become the opening inventory. So if the
Yeah.
inventory becomes the opening inventory, that means expenses
Overstated.
overstated. If
Yeah. Oh.
expenses overstated, then cost of
Then
sales
the profit is understated.
is overstated.
Huh.
So current year income is understated.
Yeah.
Current year income is understated and for the following period.
Hmm.
Following period opening inventory would be understated. Opening inventory is understated. That means expense is also understated, na?
Hmm.
Inventory, closing inventory, right? For the current year, the gross profit is understated. So
Yeah.
the following period, the opening inventory is understated, right?
No, next year the opening inventory would be overstated now.
Why? Because the closing inventory is undervalued, right?
Oh, okay, yeah, it will be understated. Sorry, huh?
Opening inventory is understated, so expense is understated.
Hmm.
If expense is understated, then
If expense is understated, then income is overstated.
profit is overstated.
Profit is overstated, sorry.
So it would be 11B.
Okay.
What okay? You understood?
Yeah, yeah.
Okay, now try the 12th and 13th. I will pause the video and then you explain.
I
So
can
you
be
have
wrong.
all information related to capital account. So you make a capital account. And this
Huh.
is net assets. Net assets is what?
Debit.
Net assets is like capital.
Oh, okay.
And capital has increased by 1210.
Hmm.
Are you with me?
Yeah.
Okay. What is your opening capital? You take any imaginary figure. I will take 10,000.
Okay.
So closing capital will become how much?
1210.
11,210.
Yeah, sorry. Huh.
From her personal bank account, she has paid rent for business. That means this is additional capital.
Yeah.
And what she pays for herself, we have nothing to do with it.
Yeah, okay.
Then there is drawings. How much?
6200.
And cash drawings of
9750.
what is the profit? Eleven two hundred and ten plus 9750 plus 6200. This is 27,160
Yeah.
minus 10,000 minus 3,600. How much?
13560. B option.
What was the harm in this? And what was so
I
difficult? You
I
want
was not making capital account. I was doing other. Okay.
to go to the next one.
Meena was a sole trader on 1st July 2018. Hannah entered into the partnership with her sharing profits equally. Profit, what was share of profit? You have to find out. So, profit before appropriation is 168,000.
Hmm.
Then you have to do irrecoverable debt minus 8,000.
But this would be paid by Meena, right?
Yeah, so it won't come.
Hmm.
So you just have to divide 160,000 by 2.
But like this, if you divide 168,000 by 2, so it's 80. You have
So
nothing
usko,
in 80s.
exactly.
So profit for the year ended 31st December 2018 was 1,68,000. So understand one thing, accruing evenly over the year. That means the profit happened every month, it was the same profit. So if my year starts on Jan 1, it ends on
Huh.
December 31st. Hannah has come into the partnership on July 1.
Okay, so you have to do in 2 months.
For the full year, it is 168,000. That means from July to December, July, August, September, October, November, December. This is 6 months
Yeah, so 168,000.
divided by 2. So it's 84,000. Are you with me?
Yeah,
Okay. But irrecoverable deaths happened in which year?
March.
March.
So it happened before the Meena came.
Yeah. So 168,000 minus 8,000, it becomes how much?
160,000.
Now tell me, what was Hana's share of profit?
One minute. So you have to do 160,000 div into 6 upon 12.
The irrecoverable deaths happened over here.
Huh.
Irrecoverable death happened during March 2018. So this is 44,000 and this is 44,000, right?
Yeah.
Otherwise. So minus 8,000. So for this, it would be whatever is happening over here, this would be done by Meena.
Huh.
What is the profit? 44.
Okay.
You did not understand.
No, I did not.
This is Jan, July,
Yeah.
and December. Okay, here Hana is admitted. 168,000 was the profit. I divided into 2 periods.
Hmm.
168,000 divided by 2. So this is 84,000
Huh.
and this is 84,000. Are you with me?
Yeah.
Okay. This 84,000 has to be shared between Meena and Hana.
Yeah. I understood this.
Now listen to me. They said 168,000 was the profit on 31st of December. Are you with me? Are you with me? Ashita?
Yeah,
Ashita,
sorry. Yeah, yeah.
168,000 is the profit on 31st of December.
Huh.
In March only you had irrecoverable deaths.
Hmm.
So you had irrecoverable deaths before this.
Yeah.
So profits before irrecoverable deaths is how much? 68,000 plus 8,000.
Okay.
176,000.
Huh.
And Meena said that whatever is this irrecoverable debts, I will bear personally.
Huh.
So the profit before irrecoverable debts would be shared.
Okay.
So 1,76,000 divided by 2. So for the first 6 months, the profit is 88,000.
Huh.
And for the next 6 months, the profit is 88,000.
But this Hana chick is only there for 6 months.
So here it is.
Yeah.
So this will be divided between Meena and Hana
Yeah.
equally. 44, 40.
So yeah, so option is C.
So that 8,000 which is going to be paid by Meena, you have to add back.
Okay.
Okay?
Yeah.
So your option is C. Go to the next one.
Z is admitted as a new partner.
Admission not there.
Okay.
15th is also admission not there. Are you with me?
Yeah.
16th. Come on.
During the year, a business issued $1 ordinary share at 1.20 each. The directors proposed a final dividend at the end of the year, which balances in the statement of changes in equity were affected by this.
They have proposed a final dividend,
Yeah, so it's proposed, it's not paid.
but you have issued one ordinary shares, right?
Yeah, so only ordinary share capital and share premium will get affected.
Option A.
Hmm.
Next one.
A company
Read
has
the
ordinary
question
share
what they
capital, total capital raised from the right issue of shares. Okay, listen. A company had ordinary share capital of 250,000. They have a nominal value of 0.250 each. So 250,000 divided by 0.25.
So number of shares is how much?
100,000.
Are you sure?
Yeah, I'm divided it.
1 million.
How it's like, yeah, sorry, there are 3 6 zeros.
It's 1 million, okay?
Huh.
Now they are giving 2 shares for every 5 held.
So 2 upon 5 into 1 million,
Hmm.
which is equal to 400,000.
Yeah, 400,000 shares.
We have to multiply that by 0.15.
No, no, this is being given at a premium of 0.15.
Yeah.
So they will take face value plus they will take premium.
Okay, so you have to multiply it by at 0. What is
0.40.
yeah,
So how much?
160,000.
Okay.
You have to add both.
Yeah, face value plus premium, right?
Okay, fine.
Face value is only 0.25.
Hmm.
Next one.
A shareholder sells some shares for less than he paid for them. What happens to the share capital of the company?
Does the share,
Decrease.
does the company has anything with what the shareholder does?
No.
No. Shareholder sells it at a higher price, shareholder sells it at a lower price. Nothing will happen to the share capital of the company.
So remains the same.
The share capital will remain the same.
Which item would result in a decrease in the expenses to revenue ratio? Okay.
Expense over revenue.
Into
Accrual for telephone, outstanding expense.
yeah,
You want a decrease in the expense to revenue ratio.
yeah,
If you have outstanding expense, the expense will increase.
yeah, it won't decrease.
Increase in provision for doubtful debts.
No, no.
If you've prepaid rent and
Then
rent,
your expense will reduce because already you've given money.
so expense to revenue ratio will decrease because of
Yeah, prepaid.
prepayment. Come on. Formula for ROE.
Capital Yeah, first you have to find capital employed. So capital employed is non-current liability plus capital, na. So you have to add all these three.
Non-current
250.
liability plus share capital plus reserves.
Huh. So you have to add all these three. I'll add and I'll say how much. It's 439,000. Okay, and the formula is profit before operations, profit from operations upon capital employed into 100. So 109,000 upon 439 into 100, which is 24.82. So 24.83.
Come on.
Absorption rate per machine hour. Okay. Um,
What is the formula to calculate OAR?
budgeted activity level upon budgeted machine hours.
Budgeted overheads upon. You don't even know the formula. You're telling me you've done 5 papers.
It is this only now, budgeted.
Budgeted overheads divided by budgeted activity level.
Okay.
What? Okay.
I didn't know, I forgot.
Give me. Come on.
12.15.
12.15. This is the OAR. Which cost is stepped cost? What is
Renting for the
cost?
factory space.
Okay. What else?
That's it on, because step costs are basically costs that are like half increasing because of the changes in variable cost and fixed cost.
Because of changes in variable cost and fixed cost.
Yeah, it's like half now.
Increase in material cost is which cost?
Variable cost.
Indirect material cost. Okay, increase in this indirect material is factory overheads. Variable cost. Okay, fine. Come on, good for this.
An employee worked a normal 35 hour week and was paid 15. He also worked 5 hours over.
Can you read loudly?
Yeah. An employee worked a normal 35-hour week and was paid 15 per hour. He also worked 5 hours of overtime, which was paid at 20 per hour,
So
and
normal
received a
wage is
bonus
how much?
15 into 35.
How much?
525.
Okay. Overtime is how much?
20 into 5. 100. And then he received $50 extra.
So
So
total.
675. The answer is D.
Are you sure?
Yeah.
Come on.
A company uses machine hours to absorb its
Read the
overhead.
question.
Which statement regarding overheads is correct? Okay.
Okay, fine. Your actual overheads is this much.
Hmm.
You budgeted this much.
So you have to subtract it.
Hmm.
Okay. I'll tell you. 253, 450 minus 237, 0, 1, 0.
You will subtract it.
Six.
Think properly.
Huh?
Think properly.
Will I divide it by the machine hours and then multiply it?
Can you give me the actual overheads?
Actual overheads is 237,010.
Can you give me the budgeted overheads for actual production?
Budgeted overheads for actual production. Uh,
How do you get this?
you have to do 253 for,
OAR into actual activity level.
okay.
Budgeted overheads for actual production, you will do OAR into actual activity level. How do you get the
Okay.
OAR?
You have to do budgeted activity level upon budgeted overheads. Budgeted overheads upon budgeted activity level.
Yeah, so what is the OAR?
I'll tell you. $18.5.
Okay, 18.5 into actual
So
activity.
18, 12460. 230, 510. So it's
Okay.
under absorbed
Why under absorb? You
because
thought
the
you
actual
would
is more
recover this
than the
much.
budgeted.
You
Yeah, so the
thought
actual is more.
you thought you would recover this much.
Yeah, but you recovered more.
You have recovered more.
Yeah,
So
over absorbed, sorry.
under absorb, over absorb, think properly.
Miss, you thought you'd recover 230, 510, but you
Darling,
recovered
you
2.
had to you actually recovered 230, 510.
Yeah,
But you had to actually, your actual expense is 237,010.
yeah.
But you have recovered only 230, 510.
So under absorbed, I said correct first.
You are not clear with your concept.
Okay.
237,010 minus 235,10. So what is it?
B.
Come on, tell me how do you calculate under absorbed, over absorbed? Make notes for it. I'm waiting for you.
Okay. Okay.
Say how to get under absorbed and over absorbed.
So first, you have to find out the OAR. To find out the OAR, you have to do budgeted overheads upon budgeted activity level. Okay, then to find out activity level, actual activity level according to the OAR, you have to multiply the actual activity level given into the OAR, which will give you the actual wala. Then you have to do minus upper. If budgeted is more, that means you have under absorbed than your actual, and if it is less, that means over absorbed.
Budgeted is more.
Then your
That it's
actual.
over absorbed.
No, if actual is more than your budgeted, okay, then you have
Under absorbed.
under absorbed, and if the actual is less, then over absorbed.
Fine. Actual minus budgeted. If it's positive, then it's under absorbed.
Yeah, and negative. Then.
Okay, go to the next one.
Show your screen.
It is showing
No.
which
Oh,
line
because I did gallery. Got it. What?
represents the total variable costs.
What now? Okay. Should I say the answer?
Yeah.
Uh,
See?
D.
Why?
I say I know. Actually, I know.
No, but why? There are two lines that is going from year to year and year
This
to
is revenue. A is revenue. Utta I know.
Okay. Because
C is fixed cost. C is fixed cost.
this is a total variable cost. Okay, fine.
Yeah, understand.
Come on. 26.
Uh,
What do they want?
Percentage increase of margin of safety.
Okay, margin of safety is what?
Break even minus sales.
Actual minus break even. How do you get the break even sales?
Break fixed cost upon contribution per unit.
Fixed cost divided by contribution per unit. Come on, tell me the break even sales.
1 second. $30,000.
30,000. What is the actual number of units?
20,000. 50,000, sorry.
So margin of safety is
20,000.
20,000 units. Now what the directors want? They want the percentage increase of margin of safety. If they increase the unit selling price by 10%, so they will increase the selling price by 10%. So the new selling price will become 27.5.
Okay.
So the new contribution will become how much?
Selling price 12.5.
So the new margin of safety will become how much? 50,000 is the actual units. Now break even units will change, right?
Huh.
By how much? Come on, 300,000 divided by new contribution. Yes.
Yeah.
So this will be 50,000 units minus. Can you give me the new break even sales?
Yeah, 1 minute. $24,000.
So the new margin of safety will become how much?
26.
Come on. Percentage increase of margin of safety. So it will be change upon original into 100.
Huh.
So what is the change in the margin of safety units?
6,000.
What is the original margin of safety units?
20,000.
Into 100.
Huh. Okay.
So how much is the percentage increase?
I'm doing
So why you said okay?
30. 30.
Next month. What do they want to know?
So what is the profit under marginal costing if the company makes and sells 1,500 batches? Okay, I will do this now.
Tell me.
12 per batch, variable cost is 4, fixed cost has been wasted 3 per batch. Okay, first you have to do 12 minus 4. Contribution you will get as 8. Okay, fixed costs have been absorbed based on normal active level of 1,000 at $3 per batch.
Just give me total contribution.
Okay. 12,000. 12, huh?
Minus fixed costs.
Yeah.
Profit.
Huh.
Normal activity level of 1,000 batches
Huh.
at 3 per batch.
Huh. So, what to do now?
You say?
So $1 to $3 will be there, and then you're making 500
You are
more, so
making
$3.
50. No. For 1000 batches, it is your normal activity level is whatever it is, but you have fixed an OA fixed cost that is 3 per
Huh.
batch. Okay, you have fixed that.
Yeah. Wow.
So 3 into 1000,
3,000.
the total fixed cost.
Okay.
Even if you produce more than 1000, it is
The
not
fixed cost will be
equal. Your
same.
fixed cost will remain the same.
Okay.
Whenever you have to calculate the total fixed cost, you take your budgeted production. If they've given you per unit.
Huh.
Whenever they've given you per unit, you will multiply it with the budgeted production. So your fixed cost would be 3000
Huh.
because you estimated based on your budgeted activity level. Then you produce more or less, it's up to you. So
Okay.
what will be the profit?
9,000.
This is very important, okay?
Yeah.
If you will do 3 into 1500, you'll get a wrong answer.
Okay.
Watch the marginal costing video too, without fail. Contribution to sales ratio.
Contributions to sales ratios, contribution of what is the formula? Contribution upon sales into 100.
What is the
Okay.
contribution?
12,
Sales
20.
to CS ratio.
1 minute. 60.
Percent. Option.
See.
Come on, this one.
The budgeted
What
information
do
for
they
one
want?
increase in profit as a result of changes. Okay. Uh,
Okay. First, you
that's
give me the original one.
okay.
What is the original contribution?
12 minus 3 is 9. So 9 into 20,000. 180
Minus fixed
minus 50.
profit.
130,000.
Okay, fine. Now, what do they want? Increase in profit as a result of these changes.
Huh.
Number of units sold will increase by 110%. By 10%. So can you give me the 110% of the units sold?
Yeah. 22,000.
Okay. Fixed costs 105%.
552,500.
Okay, fine. So the contribution per unit would remain the same, right?
Huh.
How much? 9.
So it's one, the contribution will be same only.
The number of units will be
Yeah, 22,000.
so 22.
198,000.
What is this? New contribution
Huh.
minus the new fixed cost. New fixed cost is 52,500.
Yeah.
So your new profit will become how much?
145,500.
Minus 52,500. New profit will become 145,500. What is the increase in profit?
15,500.
Option.
A.
Okay. Come on. Disadvantages of budgetary control system.
Budget holders can be blamed for uncontrolled. Yeah, true. A is true. Anything that is blaming is true. only financial outcomes are measured and considered. Okay, you've written true, so true. And rigid decision making. This is I know is true. So all three are disadvantages.
Yeah. Okay, you have to learn these. Okay, fine. Your structured paper is over. So with this,
Exactly.
Feb March 19, paper 12.
Hmm.
Okay.